Imagine waking up to find that the United States just lost its most important energy lifeline overnight. Canada, the country's top supplier of oil and natural gas, just made a bold and unexpected move, one that's about to send shockwaves through the economy. Gas prices are about to soar, businesses are scrambling, and Washington is desperately looking for a backup plan that doesn't exist. For years, the US assumed Canada would always be a reliable energy partner, but that assumption just turned into a costly mistake. With new global deals in place, Canada no longer needs the US like it once did, and it's wasting no time shifting its resources elsewhere. But why now? What does this mean for America's energy security? Canada had always been the steady, reliable supplier, delivering oil and gas to keep American homes warm, cars running, and industries moving. But that stability, it's gone. And this isn't just a short-term disruption or a political squabble that will blow over. This is a major shift, one that's both economic and political, and it's here to stay. Canada isn't just stepping away from the United States, it's stepping into a new era of energy independence, where its economy is no longer tied down by American policies and trade agreements. For years, Washington assumed Canada had no choice but to keep supplying cheap energy. But that belief is proving to be a massive miscalculation. The consequences will be felt across the board, and for American consumers, businesses, and policymakers, the real pain is only beginning. Washington thought it held all the cards. The assumption was simple: Canada needed the US more than the US needed Canada. It seemed like an unshakable arrangement. The US provided a massive, stable market, and Canada supplied the oil and gas that powered the American economy. But that balance is crumbling, all because of one critical mistake. This shift didn't happen overnight, nor was it a sudden decision made behind closed doors. It was years in the making, fueled by growing frustration in Canada over trade policies, tariffs, and protectionist moves from Washington. The real breaking point: when the US imposed aggressive tariffs on Canadian goods, what started as a political maneuver quickly spiraled into a trade war. Washington assumed Canada would take the hit without pushing back, but that assumption turned out to be a serious mistake. At first, Canada tried to negotiate. Warnings were sent, statements were made, and diplomatic channels were used to caution Washington that if trade restrictions continued, Canada would be forced to explore other options. Those warnings fell on deaf ears. The belief in Washington was that Canada had no alternative, that geography and existing infrastructure made it impossible for Canadian energy to go anywhere else. That belief is now crumbling, and the consequences are beginning to take shape. Canada's government took a decisive step, accelerating efforts to diversify its energy exports. New deals were signed, new trade partnerships were formed, and massive investments were made to shift energy flows away from the United States. The moment the tariffs went into effect, Canada made its move, and now the United States is facing an energy crisis that could have been entirely avoidable. This was not a decision made out of anger or political retaliation. It was a calculated move, a long-term strategy designed to ensure that Canada is no longer vulnerable to American trade policies. The shift is already in motion, and the United States is only now beginning to realize what it has lost. Where Canada's oil is going instead, and why it's a nightmare for the United States. The United States assumed that Canada would never walk away. But while Washington was focused on internal politics, Canada was busy securing new buyers for its energy resources. The result? A complete transformation in global energy markets, one that leaves the United States scrambling for alternatives. The new destinations for Canada's oil and gas tell a clear story. Instead of sending its resources south, Canada is pivoting toward Asia and Europe. China and India, two of the world's fastest-growing energy markets, have wasted no time locking in long-term deals for Canadian oil and gas. These agreements guarantee them a stable energy source for decades, just as global demand continues to climb. Meanwhile, Europe, still struggling with energy supply disruptions, is turning to Canada as well. With Russian imports off the table, European nations are investing billions into new infrastructure to ensure a steady flow of Canadian energy, bypassing the United States entirely. Pipelines that once funneled crude oil and natural gas to American refineries are being rerouted, and liquefied natural gas export terminals, originally meant to strengthen North American energy ties, are now serving a completely different purpose: shipping Canadian energy overseas. For the US, this is the Nightmare scenario. Losing a major energy supplier isn't just an inconvenience. It's an industry-shaking crisis. The infrastructure that once guaranteed a steady energy flow is becoming obsolete, and the ripple effects will touch every part of the economy. By the time Washington fully understands the scale of this shift, Canada will be too far gone to bring back. And for American consumers, the pain is just beginning. Think gas prices are bad now? Just wait. Losing Canada as a primary supplier isn't just a headline. It's a direct hit to millions of wallets. The cost of gasoline, diesel, and jet fuel is already creeping up. And this is only the start. Canadian oil made up a huge share of US imports, keeping gas prices lower than they would have been otherwise. Now, with that supply vanishing, American refineries will be forced to turn to less stable, more expensive sources. Air travel won't be spared either. The aviation industry depends on affordable jet fuel to keep ticket prices reasonable. With Canadian energy out of the picture, airlines will face significantly higher fuel costs, and passengers will be the ones paying the price. The trucking industry, the backbone of the American supply chain, isn't escaping this crisis either. With diesel prices expected to surge, transportation costs for everything from groceries to electronics will rise, hitting consumers with higher prices across the board. When it costs more to move goods across the country, the ripple effect is felt in nearly everything people buy. And this is only the beginning. The longer the US remains without a stable energy supply, the worse the economic fallout will become. Inflation, already a growing concern, will be driven even higher by rising energy costs. Households and businesses alike will feel the strain, and for many, there will be no easy way to absorb the extra financial burden. What once seemed like a minor policy decision has spiraled into a full-scale crisis. The US is now staring down an energy disaster of its own making. And the worst part, there's no quick fix in sight. Now, Washington is in full-blown panic mode. What happens when the world's biggest economy suddenly loses its most critical energy source? The White House is scrambling for answers, but every potential solution comes with serious consequences. Government officials are holding emergency meetings with energy executives and foreign trade negotiators, desperate to undo the damage. The urgency is clear. Without a stable oil and gas supply, the entire economic system is at risk. But even as leaders try to find a way forward, deep political divisions are making real progress nearly impossible. Behind closed doors, Congress is locked in a battle with energy lobbyists. Some lawmakers are calling for an immediate rollback of tariffs on Canadian goods, arguing it's the fastest way to restore energy imports. Others insist that the US must double down on domestic production, ramping up drilling and refining to make up for the shortfall. Meanwhile, energy executives are warning that even if action is taken today, the damage may already be irreversible. As these debates drag on, everyday Americans are feeling the pressure. Gas prices are skyrocketing, utility bills are climbing, and the cost of living is reaching new highs. Washington may be scrambling for solutions, but for millions of people, the crisis is already hitting home. Industries that rely on stable energy costs are watching their profits shrink by the day, and every delay in action pushes the country closer to economic freefall. At this point, the question isn't whether the government will act. It's whether it will act in time to prevent disaster. And this crisis isn't just about oil. The entire electrical grid is now at serious risk, and millions of Americans could soon be left in the dark. For decades, Canada has supplied the US with hydroelectric power, helping to stabilize electricity costs in key states like New York, Michigan, and California. But that support is disappearing, and there's no clear backup plan in place. With the winter approaching, the risk of widespread energy shortages is growing. Northeastern states that have long relied on affordable Canadian hydroelectric power are scrambling to secure alternative suppliers. But officials are already warning that demand will outstrip supply. That means soaring electricity rates and the potential for rolling blackouts. In cities where energy costs are already high, consumers are bracing for bills that could double or even triple in the coming months. State governments are desperate for solutions, but none offer an immediate fix. Building new power plants takes years, and expanding existing infrastructure requires long-term investments that haven't been made. Some local officials are even considering rationing electricity during peak hours to prevent grid failures, a temporary measure that does nothing to solve the underlying issue. This isn't a short-term setback. It's a fundamental shift that's exposing just how vulnerable the US energy system really is. How did a nation that once prided itself on energy independence end up on the brink of collapse? The answer isn't just in one decision, but in years of underestimating the importance of its northern neighbor. Now, the ripple effects are spreading even further. US factories are in serious trouble, and the energy crisis is threatening to wipe out jobs across the country. Steel, auto, and technology industries, cornerstones of the American economy, are bracing for disaster as energy prices skyrocket. Manufacturing plants that depend on stable electricity and fuel costs are now facing some of the highest rates in decades, making production more expensive and, in some cases, completely unsustainable. The consequences of this crisis go far beyond higher power bills. They're threatening thousands of jobs and the foundation of industrial America. Automakers are already feeling the pressure, with companies like Ford and General Motors warning that rising production costs could force them to slow down manufacturing or even shut down certain facilities.